Well, while we're waiting for Ronald to fix his video feed, a little bit of introduction. This is a new initiative by Chatham House in the Latin America program, looking at the issue of ESGs, environmental, social, and governance bonds, and their role within Latin America in addressing those specific concerns. We have a number of our members that are funders of the Latin American Initiative, BTG Pactual, HSBC, Fresnillo, Cairn Energy, that are actively engaged in these activities, but as well as a number of other members of Chatham House, CEMEX, as well as our Environmental Society program, are actively involved in researching this. This is being sponsored in part by Arcos Dorados. We're happy to count here Gabriel from Arcos Dorados, who's visiting from Puerto Rico, although he's Argentine. And the idea is to begin to explore this concept now, and explore it at several levels. First of all is to define what they are. What are we talking about here? And then second, who's doing it? What corporations are engaging in raising sustainability bonds? What banks and asset managers are handling those bonds and raising funds? And then what does that mean, third, in practice? And then last, the larger question is, can this really solve a lot of the problems we're talking about? We're very fortunate to count with the participation of Sir Ronald Cohen, who has a book called Impact, that talks very forcefully and persuasively about the import of this new innovation in financing and social responsibility. So he's going to talk a little bit about that. But then the question then is thinking about Latin America is how can these be incorporated in Latin America practice? We already see some cases where it's being done, but in terms of in relationship to, say, the United States or to Europe, regulations and practices are much more developed in other countries. And so how can these, or other regions, how can these be best be incorporated and adapted to fit the Latin American situation? So that's the agenda. We also have a dinner tonight for those of you who can make it. Obviously, you have to be in person to enjoy the dinner, but I hope you can make the dinner later to continue this discussion and also continue this discussion more generally on Latin America and the issues of politics and economics and the overcoming of the effects of COVID. So I'll leave it at that. I wouldn't normally have you all introduce yourselves, but we're here in sort of a rather fragmented capacity. So I won't have you do that unless you ask questions. What we're going to do is Sir Ronald Cohen has to leave in a little while to tend to a briefing or report for the G7. So we're going to open up with him to talk about his book, to talk about this very exciting topic. And then we'll have him answer some questions we may have from the audience. And then we'll turn to the rest of the presenters, first Mariana and then Gabriel. Mariana will talk about BTG Pactual and what it's doing on sustainability bonds. Gabriel will talk about what Arcos Dorados is doing on raising sustainability bonds and how that's changing its practice. And then we'll conclude with obviously question and answers and I hope a robust discussion that will be kicked off by a conclusion by Breno Silva, my friend here to my right. So Sir Ronald Cohen, please tell us a little bit about your analysis and how these are working in the regions you know and what their implications are for Latin America.
Thank you very much, and it's a great pleasure to be here with all of you to exchange views about what, as you've heard, I consider to be a central subject today, really, in how we meet our environmental and social challenges. So if I can just start off by giving you a 30,000-foot view of what I see happening in the world, and then shift specifically to some of the issues that we've heard about to do with ESG and sustainability-linked funding, which is going to hit $1 trillion this year. So what I see happening from my vantage point as chair of the Global Steering Group for Impact Investment, which operates in 34 countries and most of Latin America now, is that there are three forces that are actually working now to improve the world. You don't often hear comments starting with that, right? We tend to be a lot more pessimistic about what's happening in the world. The first is a massive change in values, which started off with young people a decade and a half ago who began to walk away from the products of companies whose values they didn't share, and refused to work for those companies, that became noticed by a wider population, and it caught the attention of investors who began to understand the implications for their investment portfolios of consumers and talent moving away from certain companies. And it led to a real acceleration of ESG investment. At the time when I chaired the G8 Social Impact Task Force in 2013, there were 10 trillion of ESG money. There was 10 trillion of ESG money. Today, we're talking of 35, 40 trillion or more. That represents about half of all money managed by asset managers in the world. So it's not a passing thing. And we're beginning to see this now gather momentum, as you were saying earlier, within the bond market and within lending markets. And whereas last year there were $20 billion of sustainability linked bonds issued by companies, and it's a very young market, they're going to be 100 billion this year. And I don't know what the lending figures were for sustainability-linked loans last year, but I do know that this year they will hit $800–900 billion. Now, for those who are not as familiar with financial markets, a bond usually has a fixed rate of interest. It's a security issued by a company to fund itself, its debt on its balance sheet. And these sustainability-linked bonds, for the first time in history, in terms of my knowledge and understanding, are linking the rate of interest to the achievement of a social or environmental goal. So if you're a pharmaceutical company like Novartis, you issue 1.8 billion euro sustainability-linked bonds, where your interest rate goes down by 25 basis points if your drugs reach more vulnerable populations. If your NL, the electricity generation company, which has raised $7 billion of sustainability-linked bonds, if they achieve certain environmental targets, the interest rate falls. So that's the first major force. Nobody can deny that this is new and extremely powerful. A few years ago, many people thought this would be just a passing thing. But now we see investors and companies viewing this as a mega trend with which they have to contend either positively or negatively. The second major force is the force of technology. We're going through huge leaps in technology. Artificial intelligence, machine learning, augmented reality enable us to deliver impacts globally in ways humanity could never contemplate before. So we're beginning to see disruptive business models coming. And it's not just coming through computing. We're seeing it with Tesla and the automobile industry. And basically, these leaps in technology are leading to business models that seek to achieve the same or higher levels of profit that polluting approaches have delivered, but with much more positive impacts, preferably bringing solutions and at worst reducing the harm they're causing. The third major force, which will surprise some of you, is that the technology enables us today to measure the impacts that companies create in a granular way. What do I mean by this? You can measure the environmental impact of a company in dollar or euro or sterling terms. You can measure its employment impact, its level of diversity, differences in gender pay, differences in advancement. You can measure its product impacts, the impact on the health of a population or a particular consumer group, its impact on the environment, and so on. And the G7 task force to which you referred, I think it was Christopher who referred to it, is addressing this issue of impact, transparency, and integrity, because impact has become sufficiently fashionable now that everybody claims to be delivering impact. And until you start measuring, you can't really tell the difference between one and the other. Now, where does Latin America come into this whole picture? The interesting thing is that the uptake of sustainability-linked bonds has been high in Latin America. It's one of the top 2 or 3 regions in the world where this has happened. And I find that quite interesting. I don't fully understand why, and I look forward to hearing the results of your discussion. But if you think in terms of some of the issues that the GSG, the Global Steering Group, which I chair, has been contending with, take the issue of informal settlements, otherwise known as slums. Slums require significant investment in infrastructure. They require governments to deal with the issue of property ownership. And how do you give an incentive to the populations living in slums to improve their dwellings? You can imagine some of these sustainability-linked bonds funding the infrastructure investment. You can imagine social impact bonds, which were the inspiration for sustainability-linked bonds, where you can pick a specific issue like unemployment in slums, and fund organizations with investment money with a promise to pay by government or philanthropists if the results are achieved. And you can imagine a variety of different social impact bonds addressing the different social issues that plague these slums. The issue of education being one. So you can imagine social impact bonds that address dropout rates from school, for example. So we're actually working very hard out of Argentina. Interestingly, we were just hearing from the other Christopher, I think, or Gabriel. We were hearing from Gabriel that he is from Argentina. I'd be happy to connect you with my colleagues there. We're trying to take a specific theme of this kind and use these flows of capital to address the issue of slums and the issue of education. These are two, the issues of refugees and the absorption of immigrants. These have also been dealt with in these ways. Now, of course, when you talk of inward investment, you begin to raise issues about currency and whether or not you can attract investors to invest in any security denominated in a local currency in Latin America. So I appreciate that it isn't that easy to attract outside money. But we could imagine incentives from governments that have been provided by way of guarantees or by way of tax breaks for investors, much as we get tax breaks on municipal bonds in the United States, which are tax-free. So I'll stop there. Very happy to answer a few questions and look forward to hearing the result of your deliberations, which interests me greatly.
Thank you, Sir Ronald. Yes, I know you have only a few more minutes. I have a lot of questions, but I don't want to dominate here. I will send you a summary of this so you can see the results. And this is being recorded. It's on the record. So it's also will be available to anyone. We have a good crowd online too. For those of you online, use the raise your hand function if you have a question, and I will call on you or read out your question. But let me ask first, is there anyone here in person who has a question?
It's not a question, but it's a comment that I wanted to make. So according to your reference in regards to slums, in Buenos Aires, there's a particular neighborhood called Barrio 31. It's a very, it's a very special area in regards to, the social inclusion and the economic development. It's a little bit of a shanty town or a slum, like you mentioned. And in the year 2000, must have been 2019 or 2020, just before the pandemic, the Arcos Dorados company opened a McDonald's restaurant in this area of the town, which is fully staffed by people living in this slum area or neighborhood, and it's owned by one owner who's a former employee of the company, and she lives in the area as well. So that generates an employment base and a social movement and a social progression in the area. And you can see how things are evolving around the restaurant and jobs being created and people going to schools and, the overall social improvement of this place. So, we are very proud of that particular restaurant. Whenever you're in Argentina, I think it'll be a pleasure to host you and take you to visit the place. You'll be amazed of how things are really impacting that particular area.
I would love to know more about it.
So we have a comment from Andres Velasco. He says that it shouldn't be governments that offer guarantees, but the IDB and the World Bank should perhaps offer those incentives for currency borrowing. Yeah,
I mean, guarantees have been tough to raise. Gordon Brown has been trying to raise $7 billion to fund improvements in education across Africa, and trying to bring $2 billion of guarantees from governments to help achieve this, governments and multilaterals. And it's been very difficult, despite the fact that there's a massive need for it. So I'm all in favor of guarantees and guarantee funds, but I appreciate the difficulty in putting them together. And it may be wiser to work on the incentive side and to say, we will raise the return that you can make on the bond. Although it's going to be sustainability linked, we will take it to higher levels. And governments will borrow with sovereign risk. But it's a good issue for all of you to consider, because if we're already at 100 billion a year in bonds, and if we are at about 800-900 billion in sustainability linked loans from banks, there is a new opportunity now to bring finance to tackle social issues in Latin America. This is new and different, and some investors are attracted to doing it for a variety of different reasons. And I'm very interested to see that Latin America is already awake to this opportunity. I think Europe, Latin America, and it may be Japan are the three. I'm not sure about Japan, but certainly Europe and Latin America are two of the top three companies which have issued sustainability-linked bonds so far.
Judith, McGregor has a question. Judith, can you,
Yeah, sure. Thank you very much. Thank you. That's extremely interesting. Trying to understand Sir Ronald's question about, why Latin America, and what I just wondered if there was a little bit more. You were just beginning to give it to me in a way, sort of understanding about whether these are investments which are going via international organizations, as we said, World Bank and IDBs, or are they going company to company, bank to bank? Are they going into local government? Are they going into national government? I'd just be interested for a little bit more colour, and where G7 task force thinks they've been most effective. And by implication, I mean, Mexico, I know there are different renewable policies just at this moment, but historically, it's been the Mexican government has supported renewables and supported climate change initiatives very strongly. So I'm not surprised that it may be being investigated there. I can't talk for other countries in Latin America. Thank you.
So the answer, to my knowledge, and there isn't a huge amount of detail floating around about who has raised this money, but from the reports I have seen, it's companies raising money from institutional investors, basically. So I haven't seen sustainability-linked government bonds yet, although, as we've just been discussing, you would think it would be a very natural transition. So I think one of the things Chatham House could usefully do is to be in touch with the leading bond issuers, which seem to be BNP Paribas and JP Morgan, and with the Moody's, who seem to be one of the organizations following, with analytical comment, the evolution of this market. It would be quite a useful thing for the research team at Chatham House to put together a paper on this and on the trends and the potential for government-issued sustainability-linked bonds to address social issues that matter in today's changed values, environmental and social. I think are a very interesting area.
Let me ask, I know you have to go. Yes, you have a question, Graham.
I could provide a bit of color on that. So
Please.
I'm from Blue Bay Asset Management. We invest in government bonds and corporate bonds. Almost all of the Latin American issuance has been at corporate level. And most of it has been use of proceeds bonds. So rather than being sustainability linked, it's where the company takes the proceeds and says, we're going to invest this in a renewable energy plant, or we're going to invest it in reducing our carbon footprint in some way. Governments have issued the same kind of bonds, use of proceeds bonds, but none have issued a sustainability linked bond. But Uruguay is the one that's gone furthest in investigating the opportunity. And the challenge they find is political, because you're committing to maybe pay more in interest than you would otherwise have paid if you failed to meet your target. And on the other side, making it interesting enough for investors, because if you don't have a big enough change in the coupon, there's no real incentive. Why not just buy the normal bond, which is what most people do. So the issuance that we've seen so far, both at corporate and government level, hasn't really moved the needle on pricing. That they're essentially issuing bonds at the same price that they would have issued them if they weren't green or social or sustainability linked. And I think that's the big challenge, is to move on from that to a situation where you have more investors looking to make an impact investment rather than put it in the same bucket as the rest of their AUM.
But there is still a reduction in the interest rate if they hit these targets, right? So they have an incentive.
Absolutely, they have an incentive, but then that makes the investor think, well, am I prepared to take that lower interest rate? Do I have a mandate from my end investor to give up?
So in speaking with one of the bankers in this field, he felt the trend upwards was extremely strong. He thought we were going to be moving to trillions of these sustainability-linked bonds, and some of these issues are going to need to be dealt with on the way. Do you share the same view?
I would be a bit more cautious in that I think the low-hanging fruit has been picked, and the next stage is going to be more difficult, because you have to build that link between the metric that's being measured to demonstrate an impact, whatever that might be, and the further away you get from, well, obviously you don't want to move away from the company's core business, and there aren't that many fields where it can be done. So environmental impact is an obvious one. Demonstrating social impact is quite difficult.
Well, diversity, interestingly, diversity is one area where it's quite easy to demonstrate it and verify it and so on. So in terms of social inequality, diversity linked bonds might be an applicable area. Interesting, though. I mean, I'd love to see anything that you write about this or that you find.
Thank you. I know you need to go. Rogerio has a comment, but would you? I don't know. We probably don't have time, but just quickly, why do you think it's difficult to be able to raise some of these funds in the developing world?
I think investors have not been particularly attuned to trying to optimize risk, return, and impact, but that the pressures on them to do so are mounting daily. So we've seen it with asset managers because the clients of asset management firms were beginning to ask for this. For all the the inspirational talk that we've heard from asset managers, the pressure from clients is the major factor in driving them. And so when you begin to think of institutional investors and you begin to think of the pressures on pension fund trustees to align their portfolios with the changing values environmentally and socially that we're talking about, you can see the demand increasing. And I mean, there you're talking of $30 to $40 trillion in pension funds, across the world. Insurance companies also have, I mean, this is, part of the attraction of connecting yourself to impact, but from the perspective of their customers, we're beginning to see insurance companies moving into areas of investment, ESG investment, which apply to certain policies and to agree to invest part of the premium paid by particular customers in these types of securities. So the insurance world is also a multi-trillion dollar world. So I think the demand is coming from the change in values today. But as we were hearing, the proof is going to be in the pudding. Is there a real impact that is delivered, or are you just sacrificing return for something that is intangible? And that's where perhaps I can close with this. That's where the measurement of impact is absolutely crucial. I think the next frontier for our economies and society is transparency on impacts. The ability to translate into monetary terms the impacts that companies create through their products, their employment, and their operations on people and planet, and to compare impacts with profits. That is what is going to shift our economies from risk return to risk return impact. And that's why I call impact the invisible heart of markets, guiding their invisible hand. So with that, I'm afraid I have to leave you. Great pleasure to do this.
In person at some point soon when we continue this. Please, good luck in the GE7, and I really appreciate this. Bye-bye.
Thank you. Goodbye. Goodbye, everyone.
Goodbye.
So a few things before I turn it over to Mariana. First of all, Luisa Palacios put in the chat line encouraging us to look at the IDB green bond financing, in which there are 115 bonds out there that are backed by the IDB in 13 active countries worth about $21 billion. So one concrete example of what's being done in this case with a multilateral bank. So take a look at that. And then I also want to ask questions on regulation and impact. And keeping in the spirit of what Sir Ronald Cohen said also is, looking at what we can do as Chatham House to begin to sort of push this agenda in terms of our research, in terms of our discussion. He had obviously mentioned the leading bond companies, and then also the issue of transparency and measuring impact. And those are clearly key areas. And so what I want to do is pose those two questions, starting off with Mariana and then later with Gabrielle. Not only what are you doing in this, but what are you doing to ensure that you're measuring impact and sort of broadening this in ways that ensure that the bonds are accomplishing what they're proposed or purported to do. And then also following up and allowing investors to know that those goals have been accomplished, so to incentivize further investments. Mariana, I'll just won't give you a full bio, but she's BTG Pactual, which is one of the funders of the Latin American Initiative. But most importantly, she's a head of impact investing at BTG Pactual in Brazil, has been sort of guiding us through some of this process. This has been for me a learning process. You're not all here for my edification, don't worry, but it is a way of me learning about a topic that I haven't known much about and I'm very excited about. So Mariana, please take it away. Explain a little bit about what BTG Pactual is doing.
Okay, thank you so much for the opportunity to talk a little bit more about what we've been doing the last 6 years. So we launched the ESG team in 2015. It was more a regulatory team that was focused on the approval of loans, measuring the risk regarding the environment. So this was our main goal as a ESG team in Brazil. In 2019, we understood that our clients were more focused on learning about sustainable investments and also impact investing. So we did a research, deep research, and we found out that the investors, they were willing to invest in sustainable bonds or funds, but they were not so sure what they need to know before doing those type of investments. At that time, in 2019, Latin America was responsible for 1 to 2% of all the green, social, and sustainable bonds issuance in the world. So we were really small in comparison with the world, but we do have huge social problems in Latin America, and we have huge opportunities in renewable energy, for instance, in protecting the deforestation and this kind of thing. So we understand that we had at the time a huge opportunity. So we launched a new division at the bank called ESG and Impact Investing Division. And this division is a satellite area at the bank. And we make joint ventures with lots of areas of the bank. So with investment banking, for instance, we help them on the green issuance of a bond, for instance. We guide the company in order to provide really strong sustainable goals, considering the sector where the company is based, of course. And this is investment banking. And we also help companies to integrate ESG goals and pillars to its activities. So this is something that we do with investment banking. I don't know if you know the numbers, but this year and this year only, we had emit and distribute more than double of all the green, social, and sustainable bonds we've ever distributed until 2020. So there was a huge interest. There was a growing interest from within not only the companies, but also from institutional investors and individual investors to purchase those kind of, to issue, of course, for the companies and to purchase in terms of the investors, this type of bonds. So this is something that we do together with investment banking. The hard part of that is that sometimes the companies, they are not so, how can I say that? They want to do some changes, but they are not so, they're not so, how can I say that?
It's clear.
Sure. That they want to do a really change on the company. So this is the hard part. But normally companies understand that if they issue a green bond, that do not have strong goals, this is backfire to them. So normally they accept the idea, and we can issue those kind of bonds. So this is in investment banking, but we also do some joint ventures with asset management. And I don't know if you know, but we have around $4 billion in Timberland. So we manage several Timberland funds in Latin America and in the US as well. And we launched a new division that we are going, it's a $1 billion strategy that we are going to purchase deforested areas, and we are going to rebuild the biodiversity for at least half of the land, and the other half we are going to export with timberland activities. So we are doing several initiatives in the bank, but the hardest part is regarding the education of the investors. So investors, they are willing to do those type of investments, but they are also learning. So every time that we offer a product to them, we have to explain that we meant to change, to make those changes, and those changes, they are relevant for the sector or for the company. So this is pretty much it.
Thank you. I have a question before I turn to Gabriel to talk about this in practice. And it's come through my discussions with B3, and I believe B3 is on the call. How do you regulate this to ensure? Is it, you struggle for the word, let's stick with commitment, that some of these companies are not all that committed to these principles. How do you ensure that they meet them? Because obviously there's an element of trust here for investors. If they're investing, how do you make sure that you can go back to them and say, okay, it's done that?
We have reports, that we issue 1 year or 2 years later. And the idea is that those reports, they have to be audited. So it's not something that the company is just saying that they accomplished or not. We have a third-party provider, checking and saying, okay, the company did what she compromised with. So this is something that we take care as well.
And those reporting audit processes are standardized? Is that, or does it vary by the audit?
There is not we don't have a proper regulation. So each third-party provider uses a standard. So we don't have something that is standardized. At least now. Okay,
thank you. There'll be plenty of time for other people's questions and comments. I want to turn now to Gabriel, to explain sort of how this translates into practice. Yeah, please go ahead.
I think the discussion is building in the right theme and tone. I was very pleased to hear Sir Cohen from, let's say, the academic world. Very pleased to hear Mariana from the investment world. And I'm very pleased to be able to provide you with a perspective from the companies themselves that engage in these type of activities or look for this type of funding, right? So we touched on a number of issues today and a number of different topics. And from our perspective, at Arcos Dorados, we do see ESG as a fundamental and instrumental part of how the business is structured and organized. In fact, we are structured in such a way that all of the ESG activities are not within the CEO of the company environment, but on the executive chairman of the company environment. So that sometimes the short-term and the long-term conflict, and we are structured specifically to avoid that conflict. So we have structural ways to maneuver around these type of topics. In our company, the environmental, social, and ESG governance are part of this group. And we follow a very, very detailed agenda, which we call a recipe for the future. We are a restaurant company, we sell food, so we are building a recipe for the future. And it has 6 areas of impact. Obviously climate change, a circular economy, all of the impact in the youth employment opportunities for the region. That's one of the major problems in the region. About 25% of the young people are unemployed between 16 and 24. And of the people that work, 70% do it in the informal sector. So we see that as a responsibility of our company to provide those opportunities for these people in the region. The well-being of the families as well, and this is part of our recipe for the future, and in particular to the questions posed today, how our company is looking at financing this type of work. We are right in the midst of developing our framework for a sustainability-linked bond, which is connected to the goals established in our Recipe for the Future program. So when we are approaching banks, we are presenting them our framework, we're presenting them our targets and goals, and what are we doing specifically about reducing emissions or generating formal employment or eliminating unnecessary plastics from our business and operation, and creating this positive impact across these 6 lines of work. So to the question of Mariana, I think it's very interesting as well. Arcos Dorados is the only company in our sector globally that has our sustainability reporting already audited by one of the big 4 auditing houses. So we are already embarked in this process, and to the point of, I think was Chris, you mentioned how companies monitor or track this. We are advanced already in this type of work, and last year Ernst & Young was the one doing our reporting and our auditing on our own sustainability report. So that is already part of our internal processes, right? So each year around 50,000 people go through our hiring and employment processes in the region. So we see that as a major driver of social evolution, as Mr. Cohen was talking about. We invest a lot in education, and that is through NGOs and alliances in the different markets where we operate. And we fund those programs, and we later on, we audit the utilization of the funds in regards to the impact created by those programs. So, we've been embarked in these activities since the early beginning of the company, perhaps in not a organized umbrella like the ESG proposes today. But since 2016, 2015, more or less, we took this ESG concept and we presented and organized all of this work that we are doing across the region. We serve about 4 million people every day. So that's where the impact opportunity is, right? We have a massive direct employment base, more than 70,000 people work for our company in the region. And that's the opportunity for impacting and providing tools and resources for those people to progress and advance through those alliances, whether it's internal or external. And I give you one example, and with this, perhaps we can open for discussions. Last month, we opened up our online campus for education in the region. We developed 5 specific courses for young people, free of charge, open to the community, open to everybody. The classes were about personal finance, entrepreneurship, and a couple of other things that I don't recall exactly at this point in time. But what I do recall is that we had to increase the service bandwidth to accommodate more than 20,000 people in the region that were registered for those classes. So that's the type of impact, real impact that you see. And that's how we are obviously embarking in this impact weighting accounting of the book of Sirona Cohen, and looking at how to continue building on those activities. So like I said, we are putting together the framework for this SLB. Hopefully very soon there will be interesting news about that. Right. And Arcos Dorados, again, it will be the first company in the region doing this type of work as well. So very proud of that.
Great. Lots of questions. I don't want to take up all the time though, because we have a discussion here. I'm going to let Breno just give some concluding remarks. He's worked on this a while. He's sort of promoting, if you will, sort of Brazil's and the ESG forefront. So Breno, just give a few concluding remarks and we'll.
Yeah, of course. Thank you, Chris. And I think we have great insights here today from everybody. And I think the discussion, as Gabriel says, is building up to the right direction, it's going in the right direction. And at DG, we have about 1,700 companies as part of the network. So,
Explain what DG is.
Yeah, so DG is mainly a membership organization that was founded in Brazil in 2003, and now is expanded globally. We are in 15 countries. So the purpose of it is to get business together to discuss topics of importance like we are here today doing. And what we've seen is, well, at least in Brazil, the private sector is very active. And I think that's a very important thing. It helps a lot for us to achieve these goals because the private sector understands the incentives. It needs to be, the incentives needs to be there for the private sector and understand, and it's very involved. And I'm happy to see examples in other countries like Arcos Dourados is saying. I know very well what BTG has been doing there as well, and I think it's quite important. I think the regulation policy making is a bit slower, which is natural, but it needs to catch up fairly quickly. In order to make it a bit more easier for these initiatives to come to fruition, to come to life, and a bit more structure and long-term sustainable way. What I would say is that in the region, I would like to see more investment going towards skills and people, because I think that, you know, we have opportunities, we have projects, we have some countries with quite exciting initiatives. But sometimes we need to see a little bit more investment going to skills and people, and not only at the upper management of companies, but also flowing down to all the areas of the company. I think it's a very cultural thing as well. And I also would like to see more incentives to SMEs. I think SMEs employ like 80% or 85%, or even 90% of the workforce in the region and responsible for a large part of the economy. And we see big companies and big funds doing a lot of nice stuff, but the SMEs are really lagging behind, I guess, because of the lack of investment, the lack of skill sets, and the lack of tools. And I think that we have a big part to play as well to understand how SMEs can be brought into the game, right, and do their part as well. So I think that if we do that, I think Latin America is one of the places most exciting for ESG investment at the moment. Not only because of the diversity, but because, you know, the inequality levels are so high in the country. There's so much to be done in the region. Sorry, there's so much to be done there, and I think it's also financially viable. So the companies will see returns, investors will see returns, and there's a lot to be done. So I think it's an exciting times for ESG investment in Latin America.
Thank you. Well, one of the things I've said repeatedly to, I know, Rodrigo and others here, that I want to really, one of the things I want to do is demonstrate that there's very dynamic and modern initiatives going on in Latin America with, you know, to the UK generally. The Latin American financial markets are not what we see in the news about, say, Bolsonaro or others. It's, you know, there are some very innovative things and opportunities for investment. So I want to just open it up for questions. I know, Rogerio, you had a question. Do you want to pose it now? And then I'll go to others.
Yeah, sure. Thank you, Roger, International Chamber of Commerce. I think my comment is really on how to reach scale on the transition for sustainability and ESG and climate and, you know, all these challenges that we're facing here. I think Ronald put really well the transition that we are going through in terms of values, and that reflects actually on the generation. Once the generation changes, also new values will take over on the companies, on the banks, and really my question is, how can we connect investment and help companies to navigate the ESG space in a way that is more connected to the global framework of the SDGs? Because what we see today is that, you know, coordination is needed. Everybody wants to do something related to SDG. I mean, for the ones that have been to COP this year, I never saw so much impetus and so much engagement from the private sector around a global topic. But then how can you coordinate these initiatives? And what I've been hearing from many experts and many companies is actually the SDGs could be that framework that gives us the sense of ultimate goal to achieve. I mean, how do we achieve that through either international policy or domestic policies? How can we get, you know, these policies to help us achieve that goal?
Excellent. Are there any other comments? Please use the raise your hand function if you do have any comments, as well as if you questions, if you want to comment on Rogerio's comment, because I think that's exactly, it is really the issue is how do we coordinate this to make it greater than the sum of its parts. But before Mariana, do you want to start to answer this? Is what can we start to do to increase momentum and regulation and connect a lot of the moving parts that seem to be going in different directions in some ways?
Okay, so before answering that, regarding SME, we had this year, we received this year $300 million loan from DFC, and the proceeds, they have to be used to support the expansion of the SME portfolio. So we have, when we receive those lines, we direct to SME companies. So this is something that we are also doing at the bank. Regarding the regulation, so the private sector, Rogério, you mentioned, and it is true. Before answering that, I would like just to mention a situation in 2020, February 2020. We had launched this initiative, and we went to a conference, and we were participating in some small groups with companies, and we were raising questions regarding do you want to issue a green bond or social bond? What are your ESG pillars? What are you doing in this kind of thing? So we participated in one small group, the second small group, and the third small group. We were requested by the organization of the conference that we stop to ask questions because the companies were not prepared to do so. I mean, to answer those questions. So this was February 2020. In June 2020, those same companies and other companies approached the bank in order for us to help them to do the ESG integration or to explain how we could help and how we see the sector and the company. So this is an education process, but it cannot be done only by private sectors. So we also participate in small groups linked to CVM, which is the local SEC, and also BIMA. And so we are educating also the regulator and third-party providers in order to explain what would be those standards. So our role here is not only to talk to investors or to the companies, but also to those third-party providers.
Thank you. Before I give you the well, go ahead and answer.
No, I think I wanted to comment on Rogerio's point, because in regards to transition to scale, I think, Rogerio, when companies altogether come and view things from a common prisma, that's where things start to gain scale. If companies are looking at different prismas, the light never funnels and channels, right? So when you use one, the light always goes straight. So I think that's where the scale begins to take power. So let's say all of the restaurant companies in the region begin to demand from suppliers no deforestation in the beef supply chain. That would create a massive impact in the industry. I think right now we are the only ones that are demanding this type of things from beef suppliers in Brazil particularly. But when that changes, that's when the volume and the scale comes together with this common view, right? So I think your point is correct, Rogerio. The SDGs should be the driving framework. Obviously, all of the companies are not touching all of the SDGs, but I'm sure most of the companies touch at least on the same 3 or 4 or 5 SDGs. So those need to be the commonality of the prisma, so the volume can really take off.
So we have a couple comments and questions. I'll give you the final word. Because I guess my main question is then how do you incentivize other companies to do that? I mean, how does it become rentable, profitable? But hold that thought, because we have other comments too. And I want to go, Ju Wang has, should I read it, Anar? Okay, her question is, do projects funded by financial institutions / companies in emerging economies like China adopt significantly different ESG practices compared to those funded in developed economies, say in Latin America? So are you looking at different projects in that? And who oversees the disbursement of green bonds and private financial institutions? That's one question. I'm going to read another one and then I'll turn to you, Judith. This is from Andrea Downey. While I know the institutional investment space is hitting the ground running on setting the sector up, my interest is more about retail access and believe there could be considerable interest in ESG opportunity as well in retail. Currently, I'm only familiar with ETF. I don't know what ETF are. Anyone know that?
Funds.
Okay, thanks. Bundle, I told you I didn't know much about the subject. ESG rated publicly traded stocks. Makes me wonder if there's an opportunity for governments to issue ESG bonds, similar to the old retail Canada savings bonds, for example, at a premium interest rate to go towards projects that meet strict funding eligibility criteria and subject to strict audit and performance monitoring. Food for thought, presumably sustainably sourced food for thought. Judith, your question, and then I'm going to have everyone wrap up. Oh, then Graham, then we'll have everyone wrap up.
Yes, thank you. That's very kind to come to me. I guess my comment stroke question stroke intervention is about the sustainability of the sustainability bonds and the sustainability of the social impact or the whatever other impact it is. Because I'm very, very conscious from work that I've personally been involved in with the Global Challenges Research Fund, which has addressed the strategic, the Sustainability Development Goals, which has looked for impact from the use of government money, ODA money, to work on a number of projects. And the difficulty of laying down conditions for the project to have impact, and then the problem of measuring that when the project has finished and the political environment around it may have changed. How can that be taken forward? And I think Ra was talking about, the importance of skills and talent, and as it were, developing the knowledge base so that that can be taken forward. So it's just a sort of, I'm sure everybody's 100% aware of this, but while the boom and the excitement behind all of this is mounting, it could all descend into cynicism and depression if there really is a sort of sense of it going to pet projects or going to places that it didn't go anywhere. And from Fresnillo's point of view, and I'm a non-executive director there, I think our focus has been very much on the communities around our mines, precisely because, if you like, we have the ability to monitor and to continually refresh and to measure and to invest in the community, as well as in the recyclable water project or the sort of the skills and crafts. So it's just something I think Chatham House could well, Chris, be looking at. And there's a public-private sector read across here because lots of development funds have wrestled with this, but it really is about, you shove a lot of money in and it's all wonderful, but actually the results don't sustain. So that's my question and intervention. Thank you.
It's a good question. And thanks again for Judith. Feel free to recommend what you think we should be looking at, because this is part of a new initiative and I want to get people's input. And I have a lot of philosophical questions about ESGs, but I won't bore you with them now.
In a similar vein, so we've touched on auditing and data and transparency. I think is absolutely key to that, and something that governments and organisations like Chatham House can help with. Because for a company like Arcos Dorados, for example, wants to show that its supply chain is free of deforestation in the beef chain, but do they have the data to be able to go and say that, and can they mark out a comparative advantage with other companies by being able to say yes, for sure, the beef is deforestation free. And if the government isn't making that link between where the cows came from, how they got into the supply chain, it's very difficult to do. So I think that's how we shine more light on it. And then the whole question gets more credibility and you'll see more investment in the field.
And you also implied too that then pushes the public sector to be much more responsive and actually have to say, we're going to certify this, not just leave it up to the private sector to
and it's happening from the other side as well. So legislation going through the Parliament and European Parliament around deforestation-free supply chains as well. So that push from consumers needs to be met with the availability of data to verify.
But I think that those elements come to life when we don't talk about a particular project, but we talk about how the company operates and the policies that it uses, right? It's not one particular project that is going to have a huge impact, but if for the next 20, 30 years, 50 years, that becomes part of how the company's value become real, that's where the impact, to your point about the data, I think you touched on a very important topic. And I'll probably say that most of the people are not aware of the majority or a vast amount of things that companies do on a daily basis. For instance, we monitor more than 7 million hectares of cattle movement every year in Brazil and Argentina by satellite. So we have a monthly reporting of which suppliers did what with X number of cattle heads in Argentina and Brazil. So we purchase about 40 million tons of beef every year, and all of that cattle movement is monitored via satellite, and compared with active mapping in regards to whatever potential deforestation might have occurred or not. If we suspect anything, that supplier is cut off from our approved supplier list on the spot. So, those are the type of things that I believe are not very well known to the society, but it's important that they become not a project, but the reality of how the company operates.
No, it goes to what Sir Ronald was saying too about technology. You can harness technology
Absolutely.
to do this sort of impact. You could even, you can guarantee that it's the intent is being met. There's one last question for Mariana from Angela Halk. I'm going to read it, and then I'll have Gabriel. You'll make a few comments, and then Breno, you'll make a few comments.
No.
So for Mariana, when advising companies and outlining targeted metrics, what sort of buffers, if any, address structural changes to the market? For example, the pandemic, and perhaps are there changes in management? So things that can affect the outcome of these particular goals.
Yeah, I mean, first of all, when we help a client, a company, we understand in which sector the company is immersed. So, for instance, fashion industry. The company can issue a sustainable linked note, aiming to raise the diversity on their management positions. This is not key for the sector because the fashion industry responds for 4% of the total CO2 global emissions. So it's much better, for instance, for this company to address this issue and also, of course, address diversity. But this would be the main problem of the sector. So when we advise a company, we first understand what are the main problems of the sector. Then we go to the problems of the company that are real, measurable, and what they can do to reduce those kind of problems or to eliminate. So we try to advise the client in this journey, and we just don't stop there. So we believe in the long-term relationship. So we go through the company year after year, trying to help and to increase this positive impact in the society and also in the environment.
Thank you. Gabriel, your comments.
That's a very good point that Maria touches. That is called the materiality assessment of a company. What are the material issues that a company is embarked on? And I think it's very relevant to look at how these topics have evolved across the years. If you look at 2001, more or less, on the World Economic Risks report on that particular year, it was all about technology and how things are going to be evolving, and all of the environmental risks were at the bottom of the scale. If you look at the 2020 World Economic Forum risks map, that card has flipped. All of the top risks are environmental and social. So you see how things are been evolving and how the material aspects need to be measured, evaluated, constantly. That's what triggers the opportunities for companies to embark either on projects or on policies, or working with alliances or governments. So I probably say it's a key element to understand what are the material assessments and get the company ready. Maria, you mentioned most of the companies were not ready to respond. They didn't know what their problems were. So that's also, an important aspect. what am I trying to do, what's the impact that I'm trying to create, and what I'm going to do about it in my region, right? So thank you.
Thank you, Gabriel. Brenda, just a few comments.
Thank
Wrap it
you.
up.
So yeah, I think that more than a transition, we are in a journey. And I think that one of the questions, well, how do we measure this journey? Do we look at the companies, what they did, or what they got, or their journey that they had, the plan that they have in the future, and how they're going to achieve that, and how do we measure that journey specifically? Because I think that where we're going is not a sustainable bond will give you a premium, or if you achieve your goals, but if you don't have those goals, you're not going to be able to assess funding. I think that's where we're going in the long term, or even in the short term. So I think it's how do we define those standards, and how do we understand that this whole thing being a journey, we invest in the right set of skills, tools, we invest in the right cultural elements as well, which is not only embedded into the executive committee or in the board of the companies, that involves communities, that involves all the supply chain as well, involves even the little person, the little company there in the supply chain, that you are able to bring that to that context. So there's, as any journey, there's this challenge to achieve. I think we see the right incentives, and we see the right minds getting together to understand where we are in this journey and how do we get to where we want to be. So I'm really happy with this discussion. I'm always happy to have those type of discussions, because I think it's going to help us understand where are the gaps, the bottlenecks, what do we need to do better, but where do we need to work better, work harder. And I think that it will take us in the right direction. So thank you for being part of this discussion. It's been very interesting.
No, thank you all. We had a good cohort of people online, 60-some people. Thanks for those of you who braved COVID and to come, especially Gabriel, who came from Geneva and had to have a PCR test today, this morning, just to be here. So I appreciate that. Thanks also to Arcostradas for sponsoring, again, this initiative. This is the first effort. We hope to continue it. I think there's a lot of good ideas about the role we can play. Rogelio, you also had some very good ideas too, on how to scale up, or questions about how to scale up. And we want to help to fulfill that, as well as raising some of the questions about this and their efficacy. Challenges of greenwashing, challenges of regulation, challenges even of placing too much of a bet on these, and sort of taking the pressure off states to do what they should be doing and providing basic public goods. And the question is, can this incentivize states to do that, or does it risk sort of disincentivizing them to do that? So we'll leave it there. There's obviously a lot, so keep an eye, please, on this space. We'll be continuing. Well, there will be a short write-up. I promise to Sir Ronald. We'll make it available to all of you who attended if you'd like to see it. And there's also will be a video online. So thank you all very much for joining. Stay tuned. We'll be doing a lot more on this, not just in Brazil, but other countries, and also hopefully comparatively the EU and Latin America. So thank you very much.
Thank you.
Bye-bye.